For the U.S. debt ceiling in Los Angeles, William Lee, chief economist with the Milken Institute. In Hong Kong, Hong Hao, chief economist at the Grow Investment Group. Gentlemen, welcome to the program. What do you see are the major attitudes coming from both sides, namely the Congress and the Biden administration? Mr. Lee.
We've been having this periodic kabuki dance year after year with different administrations. But this time, I think the sides are so entrenched that it's going to take a lot to get the sides to compromise their positions and to come to some agreement. So I think right now, both sides are positioning themselves to bargain. And the fear among the Republicans is that whatever they demand will carry on not only this time, but the next time as well. And they can't give ground yet. President Biden learned from his adventures in 2011 during the Obama administration that if he were to negotiate early on, it just weakens his position. So he's come into this negotiation, no bargaining. I only want a clean bill, and if I don't get a clean bill, I'm not talking. So the two sides are very far apart, and we're going to have to see how time will bring them together.
What is the reactions coming from the market exactly?
The international investors have been cutting back on holdings of dollars. The five largest investors in U.S. Treasuries are Japan, China, the UK, Belgium, and Luxembourg. And what we've seen over the last year, over all of 2022, is that Japan and China collectively have reduced their holdings by about 16% from beginning of the year till the end of last year. So that's a big reduction. So this was even before the debt ceiling. Now this tension has, I think, caused a lot of international investors to rethink the role of the U.S. dollar as a reserve holding, as part of their sovereign wealth holdings. Now, interestingly enough, a lot of the Europeans have actually increased their holdings of U.S. dollars. So even though the Asians who have been very overweight U.S. dollars have reduced their holdings of treasuries, I think the Europeans have increased. So what it really means for people like Jamie Dimon and people in the financial markets is that companies that want to start to issue bonds to finance investment, to create new jobs, are going to find that the turbulence in the market that comes about because of the uncertainty around U.S. Treasuries is going to make it more difficult for them to finance. And the reason why is because the U.S. Treasury is at the very base of the pricing of all other financial assets. Everything is priced off of Treasuries, including foreign securities. So I think one of the things that most investors are most concerned with that deal in international markets is the state of the U.S. Treasury pricing. If the people start to be uncertain about the value of U.S. Treasuries, that's going to be very difficult for everybody else.
For common investors, including the individual investors, what would be the good options at this moment?
Well, I think gold is a good option for people to have. And also, I think gold is about to make a multi-year new high, right? So, technically speaking, the momentum is very strong as well. But besides that, today, the Chinese market is actually opening its swap trade for investors, right? So there are more options for international investors to be, buying Chinese debt and also government bonds as well. And I think, many of these bonds are, having very good yields and also relatively safe. So, that is a viable option for international investors as well.
Okay. Now let's go to the 14th Amendment of the U.S. Constitution. Of course, that provides the opportunity for the president to be able to raise the debt ceiling without the consent from the Congress. How much possibility is there? What does that mean if that is being exercised?
That was a threat that President Clinton first introduced, the 14th Amendment, that the U.S. will always preserve and pay off our national debt. Now, one of the things that has not been proven is how that would be enforced and how that would be implemented. Fortunately, they've never had to invoke that particular clause because Congress has always been reasonable about at the end coming to a resolution. But it goes against the doctrine that it is Congress that is the place where revenues are raised. And so Congress has seen itself as having the primary role of managing the debt ceiling. As I said, no party's going to want to give up that right because that's a very powerful political lever they have when they're in the minority position. So the 14th Amendment is something that is a standby that the president might be able to invoke, but that'll be involved in a lot of court cases if that were invoked, and it would tie up the Treasury payments even more, and I think that would not be a good solution.
What is the reason of the debt ceiling once again needs to be raised?
Yeah, well, I think January this year, I think the U.S. bond has already reached the upper limit of 31 and a bit trillion US dollars. So for the federal government continue to function, they just have to raise the ceiling and borrow more money. And I think this year is particularly sort of strenuous because of the weather reason. The California state is late to submit their tax return, and therefore, the tax revenue from that state, one of the largest economies in the United States, is delayed, basically, right? So as you can see now, I think the Treasury general account has only 88 billion US dollars left in cash. So I think that's not going to last very, very soon. And also, besides that, you have the usual obligation to pay off your social security checks, for example, and those are automatically sent out to US residents. So just imagine that. So once your cash account run out of cash, then it becomes really strenuous for the US government to sustain its operation. So I think time is very critical, and also I think this year it is particularly difficult for the debt discussion as well.
The debt ceiling was not that big of a problem when interest rates were low, but right now, as interest rates have been pushed up because of the fight against inflation around the world, and not just U.S. interest rates, but interest rates in Europe and other places have also been pushed up. Interest payments to pay off the newly issued debt has now consumed a huge part of the U.S. budget, and as we continue to go forward, the Congressional Budget Office, which does analyses every year of the state of the U.S. budget going forward, is showing that the debt burden of the United States is well over 100% of GDP and on its way to close to 108, 109% of GDP over the next 10 years. And as interest payments start to rise as a share of the budget, that means it squeezes everything else. Now, unfortunately, the U.S. has legislation in place that requires it to pay off certain things: medical expenses, Medicare, Medicaid, Social Security. These are entitlements. And the Republicans are the ones who said entitlement spending have gotten out of control and we need to do something. That's why the Republicans have raised such a big stink about it. Now, the counter to that is that the Democrats will say, well, this social spending is absolutely required. This is a social safety net that we have promised our people. And so we have to cut back on other things. Well, the discretionary part of the budget has been squeezed to the point where the defense is on its way down, as from 3% of GDP down to 2 point something. The non-defense spending that's discretionary is also being squeezed down. So it seems like there's very little left to squeeze other than these entitlements. And that's where the political battle is. How much of the entitlements can be controlled? How much can be capped? How much of the growth can be capped? And those are the elements of negotiations that the technicians are talking about right now.
Some analysts suggest no matter what the result might be, the U.S. is switching to another period of spending in terms of strategy and reasoning, which is going to be scaling down from during the pandemic scale and ambition. Mr. Lee, are we going to see that? What does that mean?
That's where the argument is. It's where in the budget do you scale down? As I said, the discretionary part, the part that you can actually decide on scaling down, is very limited. So the part that has to be scaled down is the part that legislation requires spending to be spent. And now the question is, can we put a cap and a means test? That is, if you're a very rich person, you're not entitled to the same amount of medical care from the government as a poor person. Those kind of means testing have not been put in place for Medicare and less so for Medicaid. So scaling down is the way to go, and at least that's the position of the Republicans. And the Democrats are saying, yes, we will scale down, but the question is, we cannot scale down the vital parts of the social safety net, and that's where the fight is. What is the vital part of the safety net? And that's where the debate is.
There are debates going on in every economy about scaling down on what. But to the U.S., the infrastructures spending and also the amount of money in order to give to the individual consumers in order to encourage the spending and economic growth. How much will that be in the question?
Yeah, I think you're right that the infrastructure spending and the post-COVID wind down are the two areas where people see as the biggest place that we can get some gains right now. But the biggest costs that we need to control are medical care. Medical care has grown tremendously in the United States and continues to grow at a very, very fast pace because there are more and more people getting older and more dependent on U.S. government funding for Medicare. So it's really medical expenses is the one place that the U.S. has to control and scale down the amount of money spent without scaling down the quality of care. And that is really at the heart of the debate right now. And not just the United States, but you can see the retirement debate in France also centers on the notion of Social Security, paying for people when they are no longer working. Who does that? Those questions are here in the United States just as well.
I remember Mr. Lee starting the conversation by describing the latest political debates in the country about debt ceiling as a kabuki dance. That's a very interesting analogy Mr. Lee gave. But even if it was or it would be just a kabuki dance, how much impact will that have on people's confidence about the U.S. economy at the point when competition seems to be fierce all over the world, and at a point when the U.S. dollar was already, to a certain extent, being questioned because of the latest percentage of U.S. dollars in terms of in the eyes of global investors?
I would just say that as time goes by, and also back then, if you look at the international reserve currency structure, right? So even though the U.S. is still taking a lion's share of the reserve, but other currencies, other alternative currencies are on the rise. For example, the Chinese RMB is taking about 3% international reserve, and also in the international transaction is taking about 10% from zero 10 years ago. That is a huge advance for an alternative currency. So I think that's one of the reasons why people think that after so many years of not being able to resolve the situation, then we may want to look at other alternatives. So it's not about at this moment, at this juncture, it's not about replacing the U.S. dollar's hegemony. It's about a rising new alternative currency that has proven itself in the past 10 years.
Mr. Lee, please.
I would, Mr. Hong is very polite, but as an American, I can say emphatically, the U.S. government is making itself look like a fool. And this kabuki dance repeatedly year after year is something that has to be resolved, and yet they don't resolve it. So I would say that this continued debate and the tensions involved with the debate have gotten to the point where the U.S. image, I think, has deteriorated tremendously around the world. I know that many of the international investors that we talk to at the Milken Institute in our conferences all shake their heads and say, why do we go through this year after year? And unfortunately, as an American, the only excuse I can give is that the political science elements dominate the economics. And political science says no minority party will ever give up the right to use the debt ceiling as political leverage. And that's unfortunately the state of U.S. politics right now. The American government is making itself look very foolish in the eyes of not just U.S. citizens, but also international investors.
If I could, Mr. Lee, genuinely, I'm curious about this. Why is it that U.S. political logic are dominating the U.S. society today?
The U.S. ideals of individualism and allowing people to achieve their potential has driven the United States all throughout the ages from the very beginning. But I think in the last several years, whether it's the rise of the state or rise of regulatory aspects or the need to feel like you have to address minority problems has extended the role of the state into other aspects of society. And I think that has started to show up in economic policy. So I think the mission creep of the U.S. government is in part of the political science behind why it is that economic policies now seem to be less effective, and economic policies in the United States seem to be, unfortunately, not able to address even a simple problem like paying for the legislation that you had already put in place, paying for the bills that you already spent your money on. And I think that's a shameful part, I must say, of the U.S. government programs in the last several years.
Thank both of you for sharing your thoughts with us. William Li and Hong Hao. Appreciate it, gentlemen.